Most people wait until it's too late for them to apply for an auto loan. And usually, what it looks like is that you'll walk into the dealership and you just assume that you're going to get approved for financing for that vehicle. And oftentimes, what happens is you get returned with a copy of your credit report and it shows that your credit isn't in the best position for you to get approved for an auto loan. And so, the best thing for you to do is to prepare for the next 90 days to give yourself the best chance to get approved for auto lending. Now, when I say that we want to take the next 90 days before we go to the dealership and try to get approved for auto lending, that's not me promising or guaranteeing that if you take 90 days, you'll be able to fix your credit in 90 days. This is just an ideal window for those that have the time to actually start planning and preparing to put themselves in the best position to get approved for funding. So, at the start of our 90-day window, the first thing we want to do is we need to check our credit reports. Now, here in Canada, we have two credit bureaus. We have Equifax and we have TransUnion. Once you are able to do so, you need to pull your credit reports and we need to thoroughly go through your credit report. The first section is the revolving section. Your revolving section is going to hold your credit reports, your line of credits, things of this nature, things that constantly rotate month over month and that you have to pay off a balance. Ideally, we're sitting anywhere between 1 to 10% when it comes to our utilization. This is going to show the auto lenders or the banks that are giving us auto loans that we can take on more debt and we're not currently carrying a high balance of debt. Once we are able to get our utilization in a good position, the next thing we want to check is and we want to see is if any of our accounts have any recent late payments. If any of our accounts have any recent late payments, the best thing for you to do is to contact that lender that's reporting a late payment, call them and ask if they'll be willing to do a forgiveness removal. Now, with forgiveness removals, a lot of times they'll be willing to remove them as long as you're within the first 60 to 30 days of that late payment being reported. Anything older than that is going to be extremely difficult for you to dispute, for you to get removed off of your credit report, and you may need to lean towards disputing those late payments off of your credit report if it is older than 60 days. But ideally, you would contact that lender, have a conversation, and get that late payment removed off of your credit report. Now, just to keep in mind, this ideally works if you have a good relationship with that lender. If you don't have a good relationship, then the odds of you getting a forgiveness removal removed off of your credit report are going to be extremely low. Now, what does a good relationship look like? That is you having on-time payments. I don't care if you're going to the bank, sitting down and having a coffee with your banker. A good relationship is you constantly having a low utilization and you not having a habit of having late payments reporting every single month. Maybe you have one late payment report once a year, but 90% of the time you have on-time payments. This is you having a good relationship with your lender. You have a better chance of getting a forgiveness removal versus the person that constantly has late payments reporting to their credit report. Once you move on from the revolving section, then you have the installment section of your credit report. The installment section of your credit report, this is typically just your loans. And simply all we want to check here is just the payment history. Now, the one thing about loans that you want to keep in mind that is going to play a huge factor in you getting approved for an auto loan is your DTI. If you have a bunch of loans that are currently taking up the majority of your paycheck, then the likelihood of you actually getting approved for an auto loan is going to be extremely low. Even if you have a 700 plus credit score, we have to look at things logically and from the perspective of the lender. Why would I give you a $1,000 loan when I know you're not going to be able to at least make the minimum payments on that loan? This is the same logic that lenders have when you have a high DTI. So if anything, we want to make sure that the installment accounts that we currently have are not taking up a huge chunk of our DTI. Ideally, our DTI is anywhere between 10 to 20%. We do not want to be carrying a lot of debt. So when taking on a auto loan, usually the average for a new vehicle is going to be anywhere between $50,000 to $60,000. So we don't want to be having a bunch of debt in other areas. Now, once you've gone through the revolving section, you've gone through the installment section, the next section of your credit report is going to be the open section. This typically just houses if you have any utility bills, if you have any phone bills, small bills such in this nature. It's the same thing as the installment section of your credit report. We just want to make sure that there's no late payments. I'm not going to spend too much time on this. This really shouldn't be an issue for you, but a lot of times this is the most common account that is actually sent to collection accounts. So you do want to know how to find and see what's going on with those accounts. Next is the public record section. This is if you have any collection accounts, if you have any consumer proposals, if you have any bankruptcies, if you have child support reporting on your credit report, all these things report on your credit report. We want to make sure that nothing is reporting on your credit report. And again, this is going to be for both TransUnion and Equifax. If you have collections currently reporting onto your credit report, it is not the time for you to apply for an auto loan. Okay, I don't care what the dealership tells you, because guess what? If you do get approved for an auto loan and you have collections, you have a bankruptcy on your credit report, then you probably have a C lender. on your credit report. And if you know anything about C lenders, the interest rate on those debts are extremely high. And I don't want you to put yourself in that situation, especially if you already have active collection accounts or bankruptcy on your credit report. It doesn't financially make sense. So if you have collection accounts on your credit report, we need to address this first. Ideally, what it should look like, okay, if you're going to go into and apply for an auto loan 90 days in advance, I am checking my credit report. Do I have any collection accounts? Do I have any bankruptcies? Do I have any consumer proposals? No? Great. What do my credit cards look like? Do I have low utilization? This is what I want to be leaning towards. Do I have any recent late payments that are currently reporting onto my credit report? All of these things need to be addressed and fixed. And this is going to make you feel comfortable in those final 30 days before you actually go to the dealership and apply for an auto loan. Before you actually go into, maybe you're at the last 30 days, before you actually go into the dealership and you actually maybe you submitted the application online to get auto lending, or you're probably going to go in person to do it. Have an idea of how much money you want to put down. Work out the interest rate that you are leaning towards. You can always look up what the Bank of Canada interest rate is. Typically, an auto lender is going to add a little bit on top of that. I think at the time of filming this, the Bank of Canada's interest rate is at 2.25%. Again, this could be outdated information. It could have changed. But the bank, when they lend out an auto loan, they're going to add their prime on top of that as well. So let's just say the auto loan, if you have great credit, maybe around anywhere between 5%, 6%. And so you want to know how much you're actually paying for that vehicle with the interest rate. But you can ask these things when you go out and get lending. You know, if someone has great credit, what's the average interest rate that you guys are seeing for those auto loans? You can ask for the all-in price for the vehicle. You want to be able to properly budget out for this vehicle and make sure you can financially afford it. On the topic of affording the vehicle, what percentage of your budget should be going towards the auto loan? Ideally, we're not spending more than 10% on our vehicle that we're currently using. If the vehicle that you're looking at, if you lean it to a calculator, you could simply go to Google, type in auto loan calculator, which calculator.net will provide you with a good calculator that you can use. You'll see if that vehicle that you're interested in is actually going to be something that affordable. You could look at average interest rates for vehicles for someone that has good credit, and you could work out the math and see if that's something that you're going to be able to afford later on down the line. But on a monthly basis, an auto loan should not be taking up more than 10% of your income. If it is, then it's too expensive and you need to find an alternative vehicle. If you do desire something that's outside of your monthly budget, then maybe you want to consider saving up the total amount of money that it takes to actually purchase the vehicle. And again, you can find out the all-in cost from the dealership. Aside from asking the all-in cost, you want to see what's added in to total that all-in cost. Maybe there's some add-ons to that vehicle that you can remove to make the total price cheaper for the total vehicle. So in closing, the most important thing is that you have access to both Equifax and TransUnion. You want to make sure and check that everything is up to date. If you have collection accounts, if you have any public records on your credit report, now is not the time to be applying for an auto loan. Ideally, we're planning 90 days in advance. If we have a budget in place, then, well, you should have a budget in place. We want to make sure that an auto loan on the monthly payments is not taking up more than 10%. You want to have a good communication with the dealership. What is the interest rate on the vehicle? You need to ask these things because this is going to show you how much you're actually paying on a monthly basis. Having access to your credit report is extremely important. If you need assistance, if you need help planning out, you can always send us an email, info@kennyjohnsonuniversity.com. And until next time, peace.